Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. The channel continues to grow because of people like you. It is that time again, my favorite time of the week. We are going to do another portfolio update. We put these out every Sunday morning at around 7:30 a.m. We did add $1,422 to the portfolio, and if you are new to the channel, hit that subscribe button down below, hit that notification bell, give us a thumbs up, like the videos, join us on this journey to financial freedom, join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences. I share portfolio updates like this every week so you can see a real portfolio built out over time, see how it is done. I grew up in a double wide trailer. I did not grow up into a family with a lot of money. I've been in construction in some form or fashion most of my life, except for the 4 years I was in the military. And if I can do it, what I'm trying to show, if someone like me without a background, without a family who is in the business of making money or in business in general, that has been in the working class can do it, you can do it as well. Again, I share portfolio updates like this every Sunday. I do a stock pick of the day video Monday through Thursday. We look at a stock that's pulled back on the day to see if there is some value or it's presenting some value there. I also do a monthly series where I cover the dividends that were paid out from the previous month and what stocks I am looking to buy for the upcoming month. If you are interested in that type of content, again, hit that subscribe button down below and join us on this journey to financial freedom. Join the vested interest community. Let's jump right in. We did add $1,422 in new capital to the portfolio. Let's see what we did with those funds. Now we typically do options. We did not get anyone to bite on the options plays that we're doing. Again, if you've been watching along the channel, you know I am being impacted by the UAW strike. So last Sunday I put out a couple options plays. Usually I do it again on Monday morning to see what's going on, but right now I am working 12-hour shifts, so no one jumped on what I put out on Sunday, and I really did not put anything out throughout the week. So nothing to talk about in the options front here. And here we have some dividends from last week. These came in on Friday, but they showed up on Saturday, so I missed them in last week's update. So I wanted to cover them here in this week's update. September 15th, we had dividends paid out by Next Era Energy, ticker NEE. This is out of the utility sector. Paid $116.88, and we do have the drip set. So any funds that are paid out in dividends go right back in and buy more shares of whatever company pays those dividends. So in this case, that $116.88 went right back in, picked up 1.68443 shares of NextEra Energy. And we received dividends from Realty Income, ticker O. This one is a REIT out of the real estate sector, and this one just continues to drop. I think it's all the way down to $51 or $52 per share now. I have been adding to this almost every week. But they paid out $37.44 in dividends and went right back in and picked up 0.6865 shares of ticker O. And all total, that $154.32 in dividends, picking up these new shares, added an additional $5.24 in additional passive income over the next calendar year. Now we get into the first batch of new purchases for the week. On September 18th, we added $676.39 to the portfolio. With those funds, we added 2 shares of Kraft Heinz, ticker KHC. This is out of the consumer staples sector. We added those 2 shares at $33.36 per share. We added 10 more shares to our Verizon Communications position, ticker VZ, out of the communications sector at $33.70 per share. And we added 10 more shares of HPQ. This is HP Inc. This is out of the information technology sector, and we picked up those 10 shares at $27.27 per share. This one is another one that has continued to fall back. I'd like to build out this position a little bit more, all the positions really, but I'm going to have to start being selective because so many positions have pulled back into what I consider fair value or investable positions. So this $676.39 and these new shares added $39.90 in passive income over the next calendar year. We were back at it on September 9th. I actually set this one up on Sunday as well to pay out pick up 2 more shares of Union Pacific, ticker UMP. This is out of the industrial sector. This is a railroad company here. So I set it to buy 2 more shares at $210.50. I will probably do something similar. I like Union Pacific anytime it drops under $211. I think it closed out the week around $209 per share, but we picked up these two at $210.50. I'll probably set maybe one or two more to buy next week as well. I'd really like to build out this position. I'm in the 36 range. I think we'll see that here in a minute. And $421 added in new capital, and those two shares added an additional $10.40 in additional passive income over the next calendar year. And last but certainly not least, we went back on my birthday, September 21st. We added another $325.49. And with those funds, we picked up 4 shares of Bank of America, ticker BAC. This is out of the financial sector here. We picked up those shares at $28.29. And 4 more shares. There's Realty Income. Like I said, I've been buying this one almost every week, and I bought them at $53 and not those 4 shares at $53.09. But again, I think this one dropped all the way down to 51 or 52 by the end of the week. We'll see that here in a minute as well. So I'll probably continue to add to this one as well. And that $325.49 added an additional $16.08. All total, we invested $1,422.88 and added an additional $71.62 in passive income over the next calendar year, adding to that continually growing dividend snowball. Very nice to see this passive income start piling up week after week. Now let's run through the portfolio sectors here real quick. Communications is sitting at 8.85% of the portfolio. Consumer discretionary is making up 0.19%. Really would like Williams and Sonoma to drop back into the 120 range. It's still into the high 130s or 140s right now. And I just added Haverty Furniture Company as well. I'd like to just one share to kind of track it. I'd like that to drop under 29 and be able to add some there as well. Consumer staples is sitting at 5.60% of the portfolio. Procter & Gamble and Kraft Heinz, I'd continue to buy those both. Procter & Gamble, I'm waiting on a bit of a pullback. Kraft Heinz is in fair value in my opinion right now. So again, I've been nibbling on that one. You saw the 2 shares that I added this week there. Energy sector sitting at 7% of the portfolio. Financials makes up 9.97. Healthcare at 18.3. The biggest portion of the portfolio is sitting in healthcare. Johnson & Johnson, if it continues to drop back into the 158, 159 range, I think it's around 160 right now, I will add and round that out to 100 shares, anything around 158 on that one. So I will continue to add to this one. Pfizer is another one that I'd like to add to. My CVS position is starting to rise again, so I'm not going to add any there, but I'm looking forward to that one coming back into above the cost basis it's sitting at currently. Industrials, Union Pacific, that's where I've been adding on this one, 8.18% of the portfolio. Technology, the HPQ position right there, you saw me adding here, 8.32% of the portfolio. Materials sitting at 14.75%, the second largest chunk of the pie. Utilities makes up 6.34%, and REITs and real estate, that O position I've been adding to is sitting at 12.51% of the portfolio. I do not have any ETFs currently in the portfolio. I consider my overall portfolio my own personal ETF that I have built out. Over here on the right, you can see the portfolio sector weights, just showing it a little differently. You know, the pie chart here on the left, the percentages are all the same, but this shows you how much in cash value I have in each sector. Now, what I do every week, what you're probably here for, those of you who like to watch portfolio updates, that's what this is. This is my overall portfolio. Here's the ticker, all the positions within the portfolio, how many total shares I have, the current price as of the close of business on Friday, the market value as of the close of business on Friday, average share price per share, my cost per share, my cost basis, how much I have into each position. On the previous slide, we saw how much I have into each sector. This is by position. Total return, whether I'm up or down. I'm going to show you whether I'm up or down every week. Nothing to hide here. I want to be out in the open. Sometimes you're up, sometimes you're down, because sometimes the market's up, sometimes the market down. But I am really focused on the passive income provided by the portfolio, and I consider these pullbacks buying opportunities. So long as the business is still in good standing and nothing has changed, you should look at a pullback as a buying opportunity, as a sale, so to speak. You don't run out of the grocery store whenever there's a sale, or whatever your favorite store is, the Nike store, you know, the North Face store, whatever it is. You don't Kohl's, you know, whatever store you shop at, you don't run out whenever there's a sale. The stock market should not be any different. Just because there's a pullback, so long as the business is still meeting the metrics and your investing criteria, you should add more whenever it pulls back. Not sell it or not freak out. but add more. That's what it's all about, continually dollar cost averaging into your portfolio. And whenever there's weakness in stock, Buffett uses the term, whenever others are fearful, be greedy. Whenever others are greedy, be fearful. So when a stock really runs up, I'll use an example here. Owens and Corning, I have not been adding to this position. It's run up 47.01%. I just haven't been adding. It's above my cost basis. It's above what I want to pay for it. So I just don't add there. But these other ones, Verizon, you saw I added more. Well, it's down 20%. I feel like there's a lot of value there. Other ones, HPQ, another one, again, down below my cost basis at 26.78. So I'm going to continue to add. I'm seeing value there. Where I see value, whenever these companies pull back, I'm going to continue to add. All right, percent return right here. Sector that the companies fall in, whether it's a quarterly, monthly, semi-annual payer, the current dividend yield as of the close of business on Friday, my yield on cost, the portfolio weighting. So the previous slide we saw the sector weightings. This is by each position. The estimated annual income here in this column, what months the stock pays out, the dividend growth year over year, and where it sits at 15% of its 52-week low. This is so whenever I jump into a new position, I usually want to start it within 15% of its 52-week low, and I want to invest in companies that are below my cost basis or below this 15% of its 52-week low. So let's look for an example here. Let's use Union Pacific, the one that we just looked at, right? So I added 2 shares to this position, right? Even though my cost basis is $196.02, and it was above my cost basis at $210.50 where I purchased it, it is still below the $211.24 of its 15% of 52-week low here. So I'm willing to buy Union Pacific all the way up to $211. I really am looking at $211 even. Anytime it dips below $211, I'm willing to buy it there, even if it's not below my cost basis over here, right? I'm willing to increase this cost basis a little bit and increase this position so long as I'm buying shares under $211 per share. So that's the idea behind 15% of its 52-week low. HPQ is another one. I did add this technically, or I'm sorry, HVT here. I did add this technically above its 52-week, 15% of its 52-week low at 28.59, and I am willing to actually buy this one at anything under 29, and it's right close, 29.03. So if this one was to dip back into the 28 range next week, I will probably look to add a significant amount to this position right here. So total shares, I currently own 4,950.036 shares. Market value, I am down to $166,369.51. I have $174,004.59 into the portfolio, down overall $7,635.08, or down 4.39%. My current dividend yield, 4.753. My yield on cost sitting at 4.544. And really, this is what it's all about, whether the market's up, whether the market's down, whether my portfolio is up or whether my portfolio is down. The passive income provided by the shares, all the positions in the portfolio, continues to grow week over week as I add new capital, as the positions in the portfolio pay out dividends and buy more shares, and as the companies within the portfolio increase their payout, that continues to add to this dividend snowball, and it currently sits at $7,907.16. And I am willing to bet that next week this will roll over $8,000 a year in dividends, and I am really excited about that new milestone. And I'm very hopeful that I can get to $10,000, if not by the end of the year, within the first couple of months of next year, and be in double digits, the $10,000 and above range for dividends in passive income. So very nice to see that. Working my way to $1,000 a month in passive income, and really excited to get there. And the dividend growth of the portfolio currently sits at 8.31%. So even if the market pulls back or whatever, the overall dividend should be raised by 8.31% a year based on the growth of these payouts right now. And that's if I don't add any new capital. Obviously, I'm growing faster than that because I'm adding new capital every week. Well, that is it for this one. Let me know what dividends you were paid out this week. Let me know what positions you're adding to. A lot of red in the market. I'm seeing a lot of value all over the place. So do you have some of the same companies that I have? Have you been adding to them? If not, what have you been adding to? Are you avoiding the market altogether? Are you waiting for more of a pullback? What are you doing with your portfolios? I'd really love to hear it. Drop a comment down below and let me know. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us here on the Vested Interest community, building a community of like-minded dividend growth investors. Join us on this journey to financial freedom. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have some stocks you'd like me to cover in the Stock Pick of the Day series, go ahead and drop that down in the comment section below, and I will work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great weekend, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk you can't lose money and should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.